Hey everyone, Richard here. In this video, I'm going to tell you what I think is the fastest and easiest way to become a billionaire. And by the way, if you don't need to become a full-blown billionaire and you just want financial freedom, this is still what I think is the fastest and easiest path to do that. I think there's probably at least 5 things in this video that are going to be super eye-opening for you and hopefully give you some epiphanies while we're going through it. So you might even want to grab a pen and paper to write some of these things down as we go. By the way, if you're new to this channel, I'm Richard Hopkins and I love stock investing. Over the past 3 years, I've studied everything I could about stock investing from the world's best investors, starting with Warren Buffett and Charlie Munger. So if you're interested in the stock market and making money in the stock market intelligently, then subscribe now because I put out a new video every week. Alright, so in my lifetime, I've spent a lot of time thinking about how to become wealthy. To be honest, for me, it's not actually about the money. For me, it's about the freedom that money brings. The freedom to do what I want, when I want, wherever I want, and with whoever I want. I have this vision of having so much money that I can freely share it with those people closest to me so that they're all set up nicely too. And then one day being able to do something that actually makes a lasting difference on this world. That's the dream. And really just creating so much wealth that my future children and their children and their children and on will basically be just looked after forever. Warren Buffett has this little quote. He says, "Someone's sitting in the shade today because someone planted a tree a long time ago." I love that quote. So here's what I've realized in all my ponderings about how to become a billionaire. The secret to getting wealthy is to model after the most wealthy people in the world. Just straight up copy them. And here's the logic behind that. Why model after or try learning from the guy claiming to make $1,000 per day when you could model after the people who are increasing their net worth by hundreds of thousands of dollars per day or even millions of dollars per day? That way, if you end up only achieving just a small fraction of their results and you don't end up becoming a billionaire, well, at the end of the day, you're still gonna end up being super rich. So what do the billionaires all have in common? How do we copy them? Well, as my friend Flores says, he says every single person on the Forbes billionaire list got there by owning, buying, or building productive assets and then holding them for long periods of time. And when I say productive assets, by the way, this just means assets that generate you money. Businesses and rental properties are both perfect examples of productive assets. I want to show you now this little infographic that I found that shows on average what types of assets make up one's net worth at different levels of net worth. And let's go straight to the billionaires and see what they own. They've got business interests, real estate, fixed income investments, stocks, mutual funds. All of these things are productive assets. Something else that I find cool about this infographic is that if you think about it, the vast majority of their assets are business interests, because stocks are just business interests that can be easily traded and mutual funds are just a collection of stocks. So really most of their net worth is made up of business interests one way or the other. So if you're writing things down as you watch, I'd probably write down this one right now. Billionaires own a lot of business interests. Okay, so how do we accumulate business interests? Well, there's basically 2 options. Either build them or buy them. Now, my personal preference is to buy them. And this is gonna be my suggestion to you as well. Because as much as I love business in every aspect, I'm much more excited about the idea of buying into them than I am with the idea of building one. But let's actually talk about building a business for a second though. Because obviously that's what many of the billionaires have done. And I'll give you my thoughts on why I personally would rather buy than build. So starting and building a business is not exactly easy. First, you need a decent idea to begin with, one that's gonna have high margins so that you can actually put some money into your pocket at the end of the day. And then whatever business it is, it should also be something that can ideally scale up to be big, just to make it all worth your time. You don't want the ceiling of your business to be too low. And then you gotta make sure that you're actually building an asset, building a business that could truly be sold one day. If you are gonna go the route of being an entrepreneur and building a business, a mistake that I've seen time and time again that you'll want to avoid is that I've seen people spend years building a business and then one day they realize they don't even really own a business. They just own a job. Okay, so that actually might be something worth writing down as well. If you're gonna pour your time into building a business, make sure that you're building a business that could truly be sold one day. To illustrate this, I want to introduce you to Robert Kiyosaki's model called the cash flow quadrant. The 4 ways to produce income. First, there's being an employee. This is where you have a job and you're trading your time for your income. Then there's self-employed. This is where you own a job and you're still trading your time for your income. Maybe a little bit higher income, yes, but also probably a little bit more time is being traded for that income as well. Then there's business owners. This is where you own a system and it's your employees working that system that you own that generates you your income. And then finally we have investors. And for investors, it's your money that makes you your income. So billionaires, they do not trade their time for their money. Billionaires are definitely business owners / investors. And on that note, I actually want to propose a change to this model. I think business owners and investors are actually one and the same category. So really there should actually just be 3 categories here: employees, self-employed, and business owner / investor. Because if you're a business owner, you're still a business owner whether you're the sole owner of that business or you have a partner that owns it with you or multiple partners. And you're still an investor whether you own the entire business you invested in or you're just part owner in that business investment. So these two quadrants are actually kind of one and the same. So anyways, back to the subject at hand. We know for sure that to be wealthy, we need to acquire business interests. And I've told you why my personal preference is not to build a business or businesses, but rather to buy them. So now let me show you why I prefer to buy and how to do it. And what I'm about to show you, by the way, is what I think is the best kept secret to getting wealthy. So we said earlier that shares of stock are just business interests that can be easily traded. Keep that in mind for a second as I explain this next part. So let's say for a second that you want to buy a private company. You and the current owner, if they're willing to sell, would negotiate a price, and if you're both happy with the terms, then a deal would be made. During the negotiation phase, a fair price will be discovered between you, the buyer, and the seller. It's very hard to buy an entire business and pay a really great price unless the seller is like very desperate to sell. But even then, there's always going to be a lineup of buyers, so the seller won't ever have to lower their price too much to make a sale. The stock market, on the other hand, works differently. The price is set by the market. It's set by the people doing the buying and selling, and it's not always rational in the same way that it would be in a negotiated transaction. So this means with the stock market, you can buy a piece of a business for far less than you ever could possibly buy that business interest for in a negotiated deal. Write that down because that's the big secret. The stock market on occasion gives you an opportunity to buy business interests at incredibly cheap prices that would never be possible in negotiated deals. But here's the thing. Yes, on occasion you can buy business interests for cheap, but most of the time on any given day, the prices that are set by the market are too high. So if you wake up tomorrow and you buy stock of a business that you think is a good one, there's a good chance that you'll probably be overpaying for that business interest, which is not good because buying an interest in even the most incredible business in the world can still be a bad investment if you pay too much. So if you're writing things down, I'd write that it's very important to pay sensible prices for your business interests. The way to make sure that you're paying a good price is to calculate what investors call the intrinsic value of a business and then compare that to the price it's trading for on the market. If you'd like, you can think of the intrinsic value as the price that would be decided upon in a negotiated transaction between two equally informed parties. Yeah, there are some things to learn about picking which businesses to buy interest in and how to calculate what they're worth, but that's what this channel is for. And the good news too is that the world's best investor, Warren Buffett, has basically dedicated his entire life to teaching this stuff, and there's so much good information out there by him and also so much good information by his partner Charlie Munger. And that's why I talk about them so much. I'm kind of obsessed. Remember at the beginning we said that every single person on the Forbes billionaire list got there by owning, building, or buying productive assets and holding them for long periods of time. Well, holding them for long periods of time is actually the final missing puzzle piece that ties all of this together. So it's both accumulating productive assets and holding on to those productive assets for long periods of time that makes you a billionaire. Just look how Warren Buffett's wealth has grown by how old he was. When trying to become a billionaire, time is definitely your friend. And the best time to start is always right now. You should write that one down too. Start now. Because the sooner you start, the longer you have to let your wealth grow. And you're gonna also learn a lot by getting started, and it's better to start learning these lessons sooner than later. So that's the path that I think is the fastest and easiest path to becoming a billionaire. And this is the path that I'm personally gonna be taking as well. Yeah, maybe one day I will buy an entire business in a negotiated transaction, but for now, I think I'm just gonna stick to buying percentages of business ownership through buying shares of stock. Starting with $0 right now, if you invested just $5,000 per year for 60 years and you could compound that money at 20% annually, then you'll accumulate $1.4 billion in your lifetime. After 21 years of this, you'd have $1 million in productive assets. After 29 years, you'll have $5 million in productive assets. And after 33 years, you'll have $10 million in productive assets. And that's just contributing $5,000 per year and compounding at 20%. You could invest more, and you could also earn higher than 20% annually. That's certainly possible. The best investors do between 15% and 30% per year. And Warren Buffett has actually said that he could do 50% per year if he had to start over and was now working with a small sum of money. I want to share with you one common pitfall that a lot of people fall victim to when they get started in their journey of stock investing, which is that you don't want to fall into the trap of becoming a trader rather than an investor. In my opinion, trading is just basically gambling under the guise of investing. The idea is not to sell your stocks after they've gone up a couple $100. You actually want to be very reluctant to sell your stock. Remember, our plan is to accumulate more and more ownership of good businesses and pay sensible prices for that ownership and then hold for a long period of time. In fact, there's only 3 reasons why you should ever sell your stock, and I've made a video about those 3 reasons, and I think that's the next one you should watch. That way, between that video and this one, you're gonna have a very solid big picture overview of your wealth building strategy. And then from there, with that foundation, you can then dive into learning about how to know which businesses to actually choose to invest in. And finally, just a reminder, I'm not a financial advisor. I'm just a guy on YouTube. So do your own critical thinking, do your own research, and make your own decision before you take any action on any of the content that I put out anywhere.